points. And there's always a bull market somewhere. I don't know who said that, but it's so true. And that's exactly what we're talking about. These sectors have shown, bull market, like qualities, and they, of course, can change in an instant.
Right.
So we have to watch them closely, but there's definitely been some nice runs in these sectors. So let's talk about commodities and gold and silver. What are your thoughts with those? I know both of us initiated new positions. I'm back again into those, into that, but what are your thoughts on all that?
I think that gold has the potential to have a very big move. I think, and keep in mind, my views are based on what we know right now. On Monday, something could happen with macro, interest rates, whatever. But based on what I see on the charts and what my experience has been.
This is the first week in April for everyone.
Yep, April the 6th. What I think we're going to see is I think the economy will slow down. The Fed has gone from 0% interest rates to 4.75 to 5% in 18 months, 12 months, something like that. There's a lag effect to that. It's like an investment. You plant a tree seed today, it's not a full-grown tree tomorrow. There's a lag effect to that tightening, but the yield curve inverted, I think it was the most inverted that it's ever been, or the most inverted it's been in 20 years, I'm not sure. And while I don't obsess over the yield curve and GDP and things like that, historically, a steeply inverted yield curve does precede some type of a recession or an economic slowdown. Bond yields are rolling over. The 10-year is close to rolling over. The 30-year is very close to rolling over. TLT is one of my favorite positions here. U.S. Treasury bonds. I think that we get a slowdown. I'm not ready to say full-blown recession, end of the world, Armageddon, these things that we see on social media. But I think that a slowdown could be expected. I think we're seeing that in the charts and some of these healthcare charts. And keep in mind, stocks sold off, 20-30% between the S&P and triple Q. So that sharp decline that we had in 2022 often precedes the economic slowdown. So in that case, I do expect bond yields to come down quite a bit. And I think gold is going to break out over this 2100 level. And I think it could, if you look at the long-term chart of gold, it tends to just chop around for years. But then when it finally breaks out, it's fast. And when we dial up whenever we dial up the charts, I'll show you a longer term chart. So gold tends to bounce around for years, but then when it finally goes, it moves very fast. And I think we're very close. If gold clears 2100, then I think we're off to the races.
Very nice. Yeah, I agree with you completely. It does move very quickly.
Here's in a nutshell, here's the bull case for gold. And I don't try to get too caught up in these things, but
awesome.
If you have a concern that the economy is going to slow down, or if you have a concern that the Fed is going to over tighten and they're not going to land the ship exactly with this soft landing that people are talking about, or if you think that the banking concerns aren't done, if any of those things play out, it's bullish for gold. If the banking issues are fixed, if the Fed gets it right, lands the plane exactly right, and the economy doesn't slow down at all, then maybe gold just trades around.
Great points. I agree with you as well on all of those. I think that gold has a place in my portfolio, 5 to 10%. Not too much, but I think it's important. And also, my opinion is that we're very much in stagflationary territory. I don't like to label, I'm not an economist, I'm not some global economist, but my opinion, looking at all the indicators, it is definitely in that camp. So gold makes sense, or some other type of inflation protected ETFs. And T-bills, I do like. There's a great way of laddering them, and you can have it
Yep.
for liquidity, right? And
Yep.
you can do it weekly, so you can remain liquid and have them maturing every week. And you know, when you have the risk-free rate higher than the S&P 500 earnings yield and NASDAQ earnings yield, you know, overall view is that, you know, the equities market is on the costly or expensive side.
Right.
So, and you're getting money from these T-bills, which they haven't been this high since I think 2007. So
Very high.
yeah, it's a different regime that we're in.
Yeah.
And, you know,